Hey guys, Christopher Durham here with Fathom Realty. Thanks for tuning back in for another episode. So today we're going to be talking about loans. So one of the biggest things I get when I'm working with first-time home buyers is what type of loan should they get? There's different types of loans, but we're going to talk about the two main ones that most people are going to run into, right? And that's FHA and conventional. We have VA, which is for veterans. We have USDA, which is usually for farmland, agricultural. I'm in Palm Beach. Not going to really run into that, so we're not going to even talk about it because most of my clients will never ever see that. And so we're going to talk about the two most common ones and what should you do and which one should you pick. They all have different requirements. There's different benefits from one to another, so there's not one that's better than the other, even though some people might think so. But it's really what's best for you and what you're trying to do for you, for yourself, for you and your family. So the first biggest difference is, what is an FHA loan? An FHA loan stands for Federal Housing Administration. All an FHA loan is basically a loan that's backed by the government. So if you default on your mortgage payment, the government is going to ensure that, and it's basically going to cover the bank, right? So this is protection for the bank. Conventional loan, all it means is it's not government backed. That's it, right? So FHA backed by the Federal Housing Administration, conventional loan not backed by it. All right, so that's really the difference, right? Not too complicated. The biggest difference though is the requirements, right? There's two different requirements for each type of loan. So the first one's going to be your credit score. Now with an FHA, you can have a lower credit score and still qualify for a mortgage, right? You can still qualify for a loan. Now with an FHA, minimum requirement is a 500, right? If you have a score between a 500 to 579, you could qualify for an FHA loan. But there's a condition. Below 580, you have to pay a 10% down. Right, so depending on what the house is worth, if your house is worth buying a $200,000 house, you have to put 10% down. You're putting $20,000 down. A lot of people don't want to put that much down. They don't have the finances to put that much down. Then you also include the closing costs, because this is without closing costs. If you looked at my last video, we talked about the closing costs. So I would definitely backtrack, go to closing costs and the cost of actually financing your house. That way you could go ahead and actually see what it would be coming out of your pocket. But once you hit an FHA loan, if you have a 580, you could qualify for an FHA loan with 3.5% down. That's where a lot of people I see usually are at. They want to get up to 580, they put 3.5% down, and they go with an FHA loan. Why? Because a conventional credit requirement is different. You do not qualify for a conventional loan unless you have a 620 credit score. So you can see why some people would choose an FHA, right? They just might not have the credit score to go conventional. And so they say, hey, listen, we're ready to buy. Some people, guess what? You could have made mistakes 5-6 years ago that are still affecting you today, and your credit score is low, right? I would always suggest try to bring your credit score up as high as you can. But, life happens, things happen. And you know what? Back in the day, my credit score was horrible and I had to work. And it took me years to bring my credit score up to where it's at today. So a lot of people are ready financially. Life circumstances have changed. They're ready to go, but their credit score is holding them back. So guess what? For them, it might be a better option to go FHA so they could get into their home, right? Especially now with mortgage rates being so low, it's an opportune time to get into a house. We know that probably in the future rates might go up, right? I can't tell you that for sure, but at this point, they're at the lowest they have been in a very, very, very long time. And so with conventional, like I said, it's a 620. You need a 620 to even qualify for a conventional loan. Now, what's good about conventional, if you're a first-time home buyer, sometimes you could get a conventional loan. You have above a 620 or 620 or above with as little as 3% down, right? So FHA 580, 3.5, conventional 3% down, right? So it's a little bit less. Depending on the price of the house, it could be a substantial amount, right? 0.5% could be $1,000, $2,000, $3,000, depending on the price of the house that you're purchasing. Now, the second difference is going to be the debt to income ratio that is allowed. So it's a debt to income allowance, basically. Basically, they do a ratio. They do your debt divided by your income. And that ratio, that percentage, lets them know if you qualify for a loan. So in FHA, they allow up to 50% debt to income ratio. That's including what you would be paying for your house. So let's just say you make $5,000 a month, right? They allow up to $2,500 in debt and you could still qualify for a loan. So it's going to include your mortgage payment. They're going to look at your mortgage payment, plus credit card bills, plus card payments, any other loans that you might have out there. They're gonna look at that and do that ratio based on what you make, and then also what your expenses are on a monthly basis. So that's your debt to income ratio, and they allow up to 50%. Now, for a conventional loan, they allow up to 43%. So you can see it's 7% less, which can make a difference because there's no in between. You're at 44, you're not qualifying. All right, you better make some extra money really quick. So at 43% is where the conventional DTI or debt to income ratio is at. So it's actually going to be a little bit harder for you to get a conventional loan, especially if you have a little bit more. And maybe you're just looking to get a little bit extra house, which is going to increase your debt to income ratio. And so it might be better for you to get FHA because you do have that 50% DTI limit as opposed to the 43%. With a conventional loan. Now, the third thing between FHA and conventional is going to be insurance, mortgage insurance. So this is a big one. If you put down less than 20% on a home, you will have to pay mortgage insurance. So there's two different ones. For an FHA, it's called MIP, so it's a mortgage insurance premium. What does that do? It adds to your loan every month to help pay for the insurance that covers the lender in case you default. It's going to be based on the loan amount, the length of the loan, and so it's all good. The price is going to vary depending. I would definitely talk to a lender about that. The thing with an FHA loan, once you have an MIP or mortgage insurance premium, you pay that for the life of the loan. So say you have a 30-year loan, there is no way out of paying that insurance premium. Unless you refinance and you refinance to a conventional loan sometime down the line. With a conventional loan, right, if you don't put it down 20% towards your mortgage, you still got to pay a insurance, right? It's called PMI, private money insurance. And what you need to do is once you pay 20% off of the loan, right? Say you took a loan for a $200,000 house, a $200,000 loan, let's say, 20% would be paying off $40,000 of that loan. That would be 20%. Once you pay off that 20%, that insurance premium is going to automatically be taken off. So basically, you will not have to pay that anymore. An FHA is for the life of the loan unless you refinance a conventional loan. And so now you'd be asking, oh, Chris, all that information, what is it that I do? Well, what you need to do is whatever your lender tells you. He's the one that's going to give you the most information that you need. He's going to tell you the difference in your monthly premiums and what you're going to be paying monthly. He'll let you know what he thinks is best for you. You ultimately make the decision. Now, you may not be able to qualify for conventional, and so you're only limited to an FHA loan. At the end of the day, you should do what's probably best for your pocket. So your lender should be giving you a good faith estimate, basically what your down payment, your closing costs going to be, and what your monthly payments are going to be. And that should help you with a decision. All right, so it's not a one size fits all. It's not FHA or conventional, and one's better than the other. It's really what is best for you. And this video is just simply to give you the information that you need, so you understand when that time does come. You're not like, what's going on? You understand the difference between an FHA and a conventional. And maybe where you're at, maybe you didn't even know you could actually qualify to buy a house right now because maybe you have a 600 credit score, not a 620. And now you can say, well, I could actually buy a house right now. At least I can start the process. I can start looking. And so an FHA would be the way for you to go, obviously, because you wouldn't qualify for conventional, but buying a house is not an option that's not there for you. You could go ahead and buy a house if you wanted to. And that's why the Federal Housing Administration was created, to give people an opportunity who normally wouldn't be able to qualify to buy a house through a conventional method, through a conventional loan. Gives them the opportunity to go ahead and actually buy a house so they can become a homeowner, which is just an amazing investment for everyone. All right, guys. Well, I hope you guys learned something. I hope when you guys are close to that time, you guys are feeling comfortable. I hope with the information I give you. If you have any questions or any comments, please go ahead and comment below. And like I said, I am able to be reached at any time. Just give me a call, shoot me a DM, send me an email. I appreciate you guys, and I hope you guys found this helpful. Have a great day.